Now, the UK energy giant BP has just released its latest results, and it made profits of $3.2 billion in the past 3 months. That is way more than expected and double this time last year, as soaring energy prices is boosting earnings. They're the first results under the new chief executive, Meg O'Neill, and will be seen by some as a vindication of its pivot back to fossil fuels. BP has been torn by a shareholder row over the future of the company, which flared up at its annual meeting last week. Some, including hedge fund Elliott Management, support its move to double down on oil and gas. Others are angry at its decision to row back on renewables. The insurer Legal & General said this week it was deeply concerned and warned that climate change is, quote, a systematic long-term risk to our clients' portfolios. Meanwhile, rival Shell has this week agreed to buy the Canadian energy company ARC Resources, a move, according to one analyst, that puts to bed any hopes it will also buy BP anytime soon. Well, let's check the price of oil currently. In the last 10 minutes, we saw it trading at just over $110 a barrel, the international benchmark for Brent crude. Let's bring in Ashley Kelty, who's a research analyst at Panmure Liberum. Morning, Ashley. So we knew BP's numbers this time would be strong. The higher price of oil is helping BP and its arch rivals. But what about the future for this company? We had Meg O'Neill outlining her strategy for the company. What are your thoughts?
Well, I think the results this morning were exceptional, certainly well ahead of market consensus. I think the other point to note is that the actual results in the second quarter for BP and the other companies is going to be much better, because the high oil prices only really came in from the end of the period, basically for March. I mean, they were rising ahead of that, but certainly we're going to see even better performance in 2Q and beyond, depending on how long the conflict continues. In terms of BP's pivot back to oil and gas, I think shareholders are broadly supportive of it. I think there's been somewhat confusing about the protests at the AGM, and it's more, I think, about BP's moves to try and reduce transparency about their climate objectives and rolling back some of their targets. But the actual fundamental pivot away from low-margin renewables makes sense, and I think investors are broadly supportive of that. And I think they're right to do that. It's what they're good at, and they should continue with that. I think if investors are looking for renewables businesses, they can look separately and find other companies.
But then what is the long-term plan for BP in that case? Because this is a company that's over 100 years old. You know, as we look forward several decades, surely even BP, Shell, ExxonMobil, all the others will have to be thinking about renewables beyond petroleum, as Lord Browne once said.
Well, absolutely. I mean, they will be involved in the energy transition, and they should be actively pursuing opportunities in that. However, they should be looking at opportunities that support their current businesses. They should not be stepping out into areas which are outside their expertise. I think a key point that people forget is that oil demand is going to continue to rise through 2050. The big issue is the geographical demand growth is going to change. It's certainly going to drop in the West, but in Africa and developing nations in Asia, oil demand is only going to continue to grow further. So they are right to stick with their core business of oil and gas and look to support the energy transition, not try and lead, because it is outside their core area of expertise, and it's not what their investors are looking for.
OK, Ashley Kelty, we appreciate your analysis and your reaction to those results we've just had from BP.